Y'all sure see my screen? I'm sure. All right, where am I starting this at? All right, cool. We're going to go ahead and get started. Anybody that's not in, they can just jump in when they get here. I don't see Mike on, so I've asked Jonathan to be my eyes in the chat and come off mute when there are questions. This week is about technical analysis. Like I mentioned, this is sometimes it sounds like a foreign language, some of the things that we're going to talk about. So I encourage you, please, please, please ask questions if things seem like you don't understand. There's no wrong question. That's why we're here, is to make sure that we leave away with clarity. And as always, the group chat is going to be open too if there's any questions after this call that you may have. So jumping into it, week 2 recap and homework. There's a few people that jumped on early that told me they didn't do their homework. I'm not going to call you out or nothing, but yeah, we got to make sure you do better. All right, fundamental analysis we talked about last week, and then we went over some key financial documents that we want to look at before making a decision on if a company's strong or not. We looked at things like the industry and market analysis, key ratios, why competitive advantage is important, and then, of course, look back performance. History is typically a good indicator of future performance, so we always want to do a look back on companies to see how they've done in the past to give us an indication on how they may do in the future. And then as homework, I asked you guys, or Mike asked you guys, to look up maybe 2 to 3 stocks and review it on Simply Wall Street. I gave you my cheat code website that really breaks down all of this fundamental information for you, pretty packaged and very easily to digest. And then we asked you guys to watch I said watch Apple during the Powell speech that was last week and see how the stock actually performed, or how it reacted, or how the market acted and reacted to his speech last week. So anybody do a stock review, 2, 3 stocks on Simply Wall Street, and want to come off and kind of talk through what stock you looked at and what your conclusion was? All right. Take that as a no. Did anybody watch
I did, Chris.
Okay.
I did a couple.
Okay, so what stock did you look at?
I looked at Nike,
Okay.
Goldman Sachs, and Starbucks.
Okay. All 3 good things to look at. So let's talk about Goldman Sachs. So when you looked at Goldman Sachs, what are they ranked amongst their peers?
Oh, okay. So yeah, I didn't do that part. So this is what I did, and
Okay.
okay. So the Simply Wall Street, right?
Yeah.
I went through the tabs, which was like the valuation, future growth, past performance, and financial health. Like I can't really read the website, so I just really went off of them little check marks, the of them or whatever.
Okay.
Okay, so for Goldman Sachs, they had a pretty good valuation and pretty good financial history, but their future growth and past performance wasn't that good. And I'm just like charging that to like the whole little bank fiasco. But I feel like that's temporary. So I did choose Goldman Sachs as one of the stocks to go ahead and invest in.
Okay. Yeah, I don't think you can really go wrong with Goldman Sachs. So the only thing with Goldman Sachs, right, is that they did have a time where they had to spin off Marcus, which was one of their lines of business that was focused on the mortgage industry. And so when interest rates started increasing and things, they pretty much shuttered that piece of the business to really only focus on current clients. But now some people will feel like, shuttering business is a bad thing, but if it's hemorrhaging money and you're not earning on it, shutting it down sooner than later is the best thing to do, right? So that way you can focus in other areas. So let's see here. Goldman Sachs, let's look at their ranking. Give me a second. So when it comes to ranking, I'm just looking it up on the side here. So yeah, they're top 10. So that's good, right? They do 486 billion in revenue. So they're doing something right. So that's definitely a good indication. Any company that's making $486 billion is definitely doing something right and know when to pivot. They're
Can we
ranked
see your
number,
screen, Chris?
huh?
Can we see your screen?
Yeah,
What you're
yeah.
looking?
I was just looking on my phone on the side. But
Sorry,
no,
sorry.
no, you're
Okay,
good.
my
Let's do
bad.
it. No, you're good. Let's go ahead and do some live examples here. Somebody got a squeaky wheel. Ranking. So they're actually ranked number 5 in the US. So yeah, top 5 is always good, right? When you think about anything, athletes, music, we always want a top 5 list. So as long as they're in the top 5 list, I think you're in good shape. And again, they make over 400 billion a year. So I don't think you have any concerns there. Let's look at real quick. Let's look at what their last earnings did and how they performed. Okay, this is interesting here with Goldman Sachs. I don't want to know what the heck happened here, and this could be with them spinning off of that mortgage industry, but I'd want to know what happened here to where they lost 12.5 billion in cash. And again, it could just be the whole banking fears and everything that's going on. So maybe not something to really be concerned about, but yeah, I don't know, because as we go back, when you look at their net profit, so down 26%, down 36%, down 56%, and down 16%. So their net profit is actually trending down quite a bit, but their revenue is going up. So December to March, their revenue went up. Yeah, I think there just may be some operating issues right now for the moment. But I think long term, you're in shape. One last thing I want to look at here. Remember, we always want to look at the look back also on a stock. So this will give us a telltale sign for real on how they've been doing. Yeah, over the last 5 years, they're returning about 9% a year. So yeah, I think you're in good shape here. I wouldn't trip too much on it. Cool. All right. So yeah, so we did those things. So thanks for speaking up and talking through that. Anybody else review any stocks or anything? If not, we could just go ahead and dive into technical.
Chris, Vanita said that she looked at Pfizer and Ford, but didn't understand. Vanita Locke.
Okay.
Hold on, I don't have my glasses on. Yeah,
That's okay. It's Valenta.
I'm sorry, Valenta.
That's okay.
Okay, so let's talk through it. What didn't you understand?
I was looking for the chopsticks. So I saw the chopsticks on what is that? Hold on. On the Webull. But when I tried to go to the website that you would show, I didn't know what I was looking at.
Okay. Now you're good. You're good. That's what we're here for. So let's take a second and just look at that. Let's take a second here and let's look at Pfizer. Why is it not pulling up the stock? Oh, there we go. All right, cool. So first thing that I'll look at here for Pfizer is that, so this is the website that we talked about, Simply Wall Street. And this right here are all the different tabs that kind of give you information about how a stock's doing. So one thing here, first thing is that they're trending 57% below the estimate for fair value, which could mean that they're undervalued, but then you have to, again, take into consideration a lot of different things, right? Then we come down here and it shows how earnings are forecasted to decline by 3.8% for the next 3 years. So this may be a declining company for the next 3 years, right? They focus on medicine. If they're not coming out with any new solutions or variations of medicines, they could be in for a struggle in the future, right? We have debt ceiling limits coming up. We have interest rates rising. Like a lot of research and development is driven by government dollars and grants, as well as, benefiting from lower interest rates. So those type of things could be putting a squeeze on the funding that they have for research and development. So those are some things you want to look into. But with that said, when we look at historical, their earnings did grow by 14.4%, and they still pay a pretty solid dividend. I mean, 4.25 on a dividend is like a high interest rate savings account. So that's pretty solid. As long as the stock doesn't go into the negative, let's say 8%, you should be doing pretty well holding the stock based on the dividend there. So we'd also want to look at, like I said, the valuation. Looks like everything is pretty strong here, except for this forecast, which we talked about, the 3-year potential decline. Another thing I would want to look at here outside of that site is just going to my trusted Yahoo Finance, looking at 5-year look back and see what they've done and kind of look at the trend. So past year, they've done pretty bad. Yeah, their 5-year doesn't look that great. So I probably would, for a long-term hold, I'd have to do a little more research, but just looking at it, eyeballing it in this couple of minutes, I would stay away, honestly, from Pfizer. Because historically, I mean, they've kind of just hovered in the same little area. They have given 10% returns over the last couple of years. So like I said, as long as that's in the positive, that's a 2% return every year, plus your dividend. So you're making about 6% from holding a stock. It's a low cost to entry stock. So that would be attractive, but it's in a decline here since 2021. Right. So it's really been declining pretty heavy. And we know why it spiked here. This was all because of COVID and the vaccines. But before that, we're at the same levels before COVID hit that we are right now, which means that the only reason it really spiked was because it benefited from COVID. Now, if that's the only catalyst and there's nothing else, that's a one-trick pony to me. I would stay away personally from Pfizer. Unless I hear something about them testing something new that's maybe getting approval by the FDA sometime soon, next year or two, I probably wouldn't touch it. I think there's better value stocks out there right now.
So I have a question.
Okay.
So I hear that there's supposed to be another pandemic. Would this be something that you would kind of hold and wait to?
So if we see signs of something breaking out, right, then yeah, I would probably jump into this, right? I will look at the charts, the technical analysis that we're going to talk about, see what the pandemic is, look at their products and see if they even have something for it, or if they're working towards a solution before I jump in and make that decision. Just off the hope that they're not the hope, but just off the news that there may be a new pandemic, I wouldn't touch it, because I mean, it could be 5 years, and we see for the next 5 years holding this, we would only get 10% maybe, and that's too long to hold my money for little returns. Good question though. All right, cool. All right, let's get into it.
You got more questions, or you just want to go right into the stuff?
No, one more question. Go ahead. We're good.
We have Kendra says that, they were talking about harsher versions of C-19 may arise. Oh, I'm sorry. That's what it says. May arise. So I'm thinking more vaccinations, possibly a future increase. I guess.
Yeah,
that's
maybe.
Yeah.
So maybe. So again, that's kind of going back to the same question that, yeah, it may happen, right? But again, that could be years down the line that occurs, right? And until it touches U.S. soil, it doesn't really matter to affect us. And then with the debt ceiling situation going on, I mean, we don't even have the money to put into research and development. Like Pfizer benefited a lot from government funding to find a vaccine. So I'm not sure that we would see that same type of outpour of money as we did in the past, because we really can't afford it. Good questions though. All right, so last week we talked about fundamental analysis, right? The two things that we put together to make decisions on the stock market. The fundamental analysis, or like the foundations of a company, the financials, the management, their market share, and all those things that we talked about. And the technical analysis really helps us identify opportunities based on trends and statistical historic movements of a price of a stock or the volume of a stock in a certain direction. So with this, we don't look at like intrinsic value, which is the value of the company. We only use stocks to identify patterns, right? You may have seen me post about, you probably never thought you would use geometry as an adult. Well, when you start trading stocks, it's all about shapes in different angles and trends and stuff. So you're definitely going to be using geometry once you get into technical analysis. So the thing that we talk about in technical analysis, I know someone called it chopsticks, but I knew what you meant, is Japanese candlesticks. And I think in week one, I told you the value of a stock or anything in life is all about emotion. It's how does a person feel about this thing? And if they feel strongly about it, they're going to attach a value to it. What are you willing to pay for something based on how strongly you feel about it? So that's all we do when we're trading in the stock market and trading candlesticks. This is just showing emotion and sentiment of individuals in the market and representing it in color, right? And remember, we talked, I think, with week two.
A lot of scratching up.
Mute, please. Mute. 1 second, I still gotta mute everybody. All right, there we go, here on. All right, so red and green, right? We talked about bear versus bull. Everybody remember what the difference in those two things are?
Yeah.
Yes.
Okay. All right, who can tell me? What's a bear versus a bull?
A bull is when you
You
think
want that
the
move.
stock will soar. Bear is when you think the stock will plummet.
Cool, right. Or go down, or soar, plummet. Yeah, either way, go up or down. Perfect. And so the candles are represented in color, so you can see bullish versus bearish action. And when you see these candles, you're like, okay, I see these wicks going up. I see these candlestick bodies. I see all this stuff going back up, up and down. And so what the candle does, it shows 4 different parts of a stock price. It shows the open of the market, which is the first price that we see as soon as the market open. It shows the low, which is the lowest point that a stock touches within the day. And then it gives us the high, same thing, and then the closes, which is what price was the last price before the market closed that it gave us. So that's what it shows us. And then you have these different parts. You have, like I said, the wicks, which are like your shadow bodies, and then you have the candles, which are these full color bars here, and sorry, right here, and these are considered the real body, and we'll go a little more into that. So breaking that down, you have your bullish candlestick, which is the green one. If I opened up, this is where the market opens right here. This would have been the low of the market, which is this little shadow right here, or my lower shadow. The close of the market, again, is the last price before the market closes at the 3 p.m. Central Standard Time. This is the highest part, and then this is the shadow where there was a lot of price action going on, but no one could really close this out. It was tug of war. On the inverse, you have the same thing with the bearish. You're right, it's just a different color candlestick that you would see when you're looking at a bullish versus a bearish candle. So the candlesticks, so you have the fundamental analysis that tells the story of the business, and the candlestick tells the story of the price action and the sentiment as you're trading in the market. So candles, they come in all different shapes and sizes, but the story that they tell in these different shapes and sizes of the bodies and the wicks is how strong and how directionally strong is this movement actually going. So as you can see, if it's a full body, is more bullish or bearish, right? Once it's a full body, that means more people are on the same page with the stock going in the same direction. As you start seeing these wicks and things like this form, this is telling us like the direction that the stock was going is tapering off a little bit. And now there's uncertainty coming into the market on what direction that the overall market wants to take the price of this stock. Good? That makes sense?
Yes.
Yes.
All right, cool.
Okay, now say it one more time.
Okay, thank you for coming off and being honest with us. So the candles come in different shapes and sizes. And what this shows is that when you have a candle that's more strongly like with a full body, that means that the direction of that stock is strong, right? So if it's a full body, that means this is very bullish and this stock is going to continue to go up, or very bearish, and the stock's going to continue to go down. Now, as we start seeing these little shadow bodies and wicks occur, that means that whatever the stock was doing, that momentum is fizzling out, right? And we're probably going to be key for either some sideways moving or for it to go in a different direction.
What is a wick again, Chris?
So a wick is a wick or shadow body, and what that means is that it's showing that there's some opposition coming, but the opposition isn't strong enough to move the stock in that direction. So right here, this is still pretty bullish, even though we have some opposition that wants to pull this stock down. That's what this wick means. But the bull momentum is still stronger than the bearish momentum. So this stock is going to still keep going up. Now, when it gets like this is complete uncertainty, tug of war. We're in the middle, pulling as strong as one direction as we are in the other.
So when at the bottom where it's showing the box, that means it's more bearish, and as it goes towards the top, it's more bullish, is what you're saying, correct?
Yeah, the wicks. Yeah. Oh, sorry.
Right.
Yeah, the body, the boxes. Yeah, for sure.
Right.
Yeah.
Okay.
Now you also want to look at the color, right? Green
Right.
versus blue to tell you the story on the chart.
Let me ask something, Chris. You always want to compare the body of the candle to the size of the wick inside the candle as well, to really understand the direction that the stock is also going. Just wanted to add that.
For sure. All right. So common candlesticks. So we talk about patterns, right? Just like humans, right? We observe patterns, and when a pattern's off, you know something's wrong or something's going on. Same thing with candles. We want to observe the patterns and learn the patterns of the candlesticks and the way that they move. That's how you make money, by looking at high probability setups and being patient. So there's a couple of them. We're going to go through the bullish ones. So you have your bullish spinning top. Again, this is the chart has been going up. Stocks are going in a certain direction to the uptrend, and then they kind of, somebody got their hand up. Give me a second, I'll get that question. And then it kind of starts spinning at the top. We don't know what's going to happen here. That's a bullish spinning top. Your hammer, think about the hammer like when you're at a carnival and you have the hammer where you hit the thing and the lights go up to the top. That's the same thing with the stock. As the stock's going down and you're swinging down on that hammer and you see that hammer connect, most likely the stock is about to redirect and start going to the upside. So that's how you look at a hammer. Your bullish engulfing means that we've been going in a downtrend. However, this next candle, the bulls came in and took over like Pac-Man and ate this red candle. This is an indication that most likely the next candle is going to be a green candle going in the up direction. So these are the type of things that you look for when making a decision on going into a trade. You have your inverted hammer, which is similar to the hammer, right? Stock's going down. You see this Thor hammer coming. This is your indication that, okay, it's time to get going in the other direction. Your morning star, same thing. We're all coming out of a downtrend. Morning star, the stock, it's time for this stock to wake up. That's how I think about morning star. It's time to wake up. Next candle is usually green. Then the next one's another green candle. You have your piercing line. This typically happens after a prolonged downtrend. And then you have this green candle comes in and almost takes out the entire body. And what typically happens is that next one is the one that basically kills it off. You start with the piercing, the next one takes the head off, and the stock starts going up to the uptrend. Then you have your morning doji star. Now, again, we're going to talk about these dojis. They're similar to the bullish spinning top. But when you see a doji, again, this is tug of war. The market doesn't know what it's going to do in either direction. So dojis typically, if they're at the end of an uptrend or at the end of a downtrend, they typically indicate a reversal, but you still want to wait for another confirmation candle to happen before just diving into the stock. Just because you see a morning star or a doji. Then you have your three white soldiers. Again, these are all patterns that happen after a downtrend, and we'll talk about the bearish, which is the reverse of that. But your three right soldiers, I think about that like a stock's bleeding. Three right soldiers are like your white blood cells are coming to clog up this bleeding point, and now the stock is going to allow the blood to start going back to the levels that it needs to, or the stock going up. So that's the bearish candle patterns that we look at. And then you have your bearish candlesticks, which are just the inverse of that. This is at the end of an uptrend. You start seeing these type of patterns at the end of an uptrend. Most likely it's going to indicate that the stock's going to start going in the opposite direction or falling if it's coming from the top of an uptrend. So bearish spinning top of an uptrend, what's going to happen? We don't know. Typically the next candle is going to be a downtrend. Your shooting star, when you see this, we know what shooting stars do. They don't shoot up, they shoot down. So that's how you think about a shooting star. Your bearish engulfing is just like the bullish. Pac-Man came, we're going to eat this green candle. Most likely we're going to continue in the direction of going down. You have your hangman. I hate that it's called that, but that's what it is. Hangman, when somebody's hanging, of course, eventually they're going to die, right? So you have a hangman candle killing you off. Your evening stars, time to go night-night. When you see that, that's how I think about my evening star. You have your black cloud cover. This is, again, we're going up, we're going up, we're going up. Then we have this black cloud, which means that, man, now it's about to rain on my parade. So I'm going to go in the opposite direction. You have your evening star doji. Again, it's tug of war. We don't know what's going to happen, but since this is happening at the top of an uptrend, most likely it's going to reverse and start going to the downside. And then lastly, you have your three black crows. We know when you see crows in movies like The Omen or anything, crows mean death. So most likely the stock's about to die off when you see those three black crows. Now, I know that was a lot. I know that was fast. So I'm going to stop there and see if there's any questions about those patterns. All right, cool.
Are you able to show an example of one of these patterns currently?
Yeah, we're gonna get into some live. We're gonna get into some live after we go through this. That's gonna be the last piece of it, is going on the live chart. All right, so like the candles, you also have reversal patterns. Now,
Hold on, before you continue, Chris, Brandon Lee Frazier says doji doesn't have a color.
yeah, dojis, they do have a color, but they're so thin you don't really tell. But you'll notice them on the chart if they're red or green. But to be honest with you, the doji color doesn't really matter, right? It's tug of war. We don't know what direction it's going. Now, if it's red or green, it's typically just because if it's at the top of a uptrend, it'll be green. If it's at the bottom of a downtrend, it'll be red. But the color of a doji doesn't really matter, just because it's uncertainty. All right, reversal patterns. So this is what I usually trade. I trade patterns. I trade reversal patterns and pullbacks. So we'll talk a little bit about these. So a double bottom, this is probably one of maybe my second favorite type of a pattern. And this occurs once a stock has been dropping and then you see a small little bounce in it. A lot of times people will jump in as soon as it bounces, and then it reverses on them again, and they either, close out or panic or whatever because they start losing money. What I like to do is wait for the first bounce up and then see if it's going to break through, and then let it come back down again and see if it's going to break through to the bottom or not. But then once I catch that second bottom bounce and it breaks above this first resistance here, that's when I jump in. And these typically, if you catch it here, once it breaks, it'll typically run all the way back up to either take this one out or get here and reject again. So these are always a good pattern to look for to make some quick money if you want to do day trading on stocks.
Okay, Chris, we got some questions, man.
Okay.
So after the doji question, it was on the last slide, and I was listening thinking that maybe it would kind of explain it some. Says,
Okay.
which are the more positive of them in both categories?
The most price action
Yeah, I guess that would be it.
yeah, confirming. I mean, so three right soldiers is super strong. The bullish engulfing is super strong, and your dojis are strong too. Now, again, they indicate indecision in the market, but once it chooses a decision, it's going to run in that decision for a couple of candles. So those three, I would say, for me. Mike may have a totally different set, but I also like the morning star. I call it the horn, because typically it comes down and then once it reverses, it starts forming like this horn formation. I like that one also, but those are mine. Again, I don't know, Mike, if you have something different, but those are the ones that I like when it comes to the candlestick patterns.
Yeah, for me, I like the engulfings and the dojis on some of the higher time frames. So the higher the time frame, the more positive or the higher probability that it's going to move in that direction. So anytime you see a bearish engulfing, or maybe the 15-minute time frame, or maybe even the hour or 30-minute, it's usually going to move in that direction for a reversal.
Yeah, for sure.
Okay, so there's another question, which I'm predicting. Oh, here it is, Stephanie. When is the best time of day to get in or out of a stock?
That's a great question. So I'll give you the time frames. So beginning of the market for like the first hour and a half or so is where you're going to have the most volume and action going on throughout the day. And then during the middle of the day, that's typically when Wall Street takes lunch breaks and everything. So you can still make money. There just won't be as much volume as movement as you see at the beginning of the day. And then the last hour of the day, which is called power hour, you see a lot of volume and everything happening also. Now, when it comes to trading stock options, the middle of the day is when I really start looking at an option I'm going to take, because the premiums drop with the volume not being as high. The cost to get into a play becomes a lot cheaper towards that lunchtime. And then once the volume picks up and the action starts going towards that power hour, you can see some real quick spikes in a price of a stock. But yeah, those are the two time frames where you see the most action going on. Good question.
Okay, the last statement she said here is, so last week is long-term. This is more of day trading, ? Now I understand more when you say stick talk.
Exactly. Yeah, this is stick talk. Yeah, exactly. Last week was more for long-term portfolios. This week is for people that want to actually trade stocks or trade options. But even with this information, you can find, let's say, a pattern on the daily time frame for a stock and say, okay, I got a feeling that this stock is going to do well, and give yourself some time and buy that share of a stock and just hold it for a couple of weeks until the pattern forms out, and then sell it out. So you can still have a mix of day trading, long-term, mid-term going on here. For instance, we talked about PACW last week, which I said was one of the ones that I was looking at. Got in when it dropped to like the $4 range, waited for it to form a pattern on an uptrend and held it. And then, what was it, Tuesday, I believe it was, it went up to maybe 860. And I started seeing these type of patterns happen, and that's when I decided to get out of it. But even with that, though it wasn't a long-term like 2 months or a year, it was still longer term than normal, right? It was 13 days for the play to actually play out, but it played out well. All right, so talked about the double bottom. I know Mike loves this one too, but that's one of my favorites. The expanding triangle is another one. I don't really play this one a ton, just because I feel like this pattern takes so long to play out, right? A stock can be going down for a long time before this actually plays out. So typically what I do is with something like this, if I see this on like the larger time frame, I'll jump down into a smaller time frame to see if I can find like a double bottom or a triple bottom or something within that pattern to play time within time. The inverted head and shoulders is another one. Is very similar to what you see next to it as a triple bottom. But right here, you got your shoulder, you got a head, and then you have a shoulder right here. So this inverted head and shoulder, or the head and shoulder, these are super strong patterns. And when they form and you see them forming and they break the neckline, they're typically going to go in the direction that this third little touch happens here. So if I see this like on a daily right before the stock market closes, I'll jump into a play on this and let it play out for a couple of days, because it's going to go in this direction for a minute. Same with the triple bottom. Like I said, they're very close. And then I know I said the double bottom is my second favorite because my number one favorite is the falling wedge.
Yep.
Coming out of a wedge reversal or downtrend reversal, stocks typically go bananas. And I'll show you a live example that a lot of us caught today with NVIDIA because it was going into a falling wedge for a while and then decided to just break out, and it broke out crazy. So that's my number one. Double bottoms, probably my number two. And then of course, like I said, I love my head and shoulders and reverse head and shoulders. So of course, the bears have their patterns, and again, all this really is just the inverse. It's like Stranger Things, right? This is just the upside down world of the world that we already in. So this is my bearish pattern. So just like a double bottom, your double.
Hold on,
tops.
Chris.
Yeah, go ahead.
Does sniping use the same strategy?
Yes. To be a sniper, you will do the same thing. You will look at these same patterns. You'll just be doing these on a smaller time frame. So typically, if I see something like this forming on the 4-hour time frame, I'll drop down to the 15 for some confirmation. But I'll take my trades. If I'm doing day trading, I'm gonna trade within like the 1 minute time frame. So I'm really in a trade for a couple of minutes before I get in and get out. So yeah, scalping plays by the same rules, just on a smaller time frame.
All right. The next one is but when you intend to enter an option trade, be sure to pay attention to the expiration date, right?
Oh yeah, absolutely. You definitely want to pay attention to the expiration date. So it all depends on what you're in it for. If you're a scalper, for me as a scalper, expiration date doesn't matter because I'm only trying to stay into a play for a couple of minutes. And as long as I see the pattern and I see the volume and I see the price action that I'm looking for, I don't care when it expires, right? I do a lot of what they call 0 DTE, which is 0-day trading expiration. I do a lot of those, which means that my option is going to expire in that same day, but I don't care because I'm only going to be in it for a couple of minutes. Once I get my percentage that I want, I'm out of that play. Now, if you're doing something more long-term, yeah, you want to look at the expiration date because there's a thing called theta, which is time decay, which can go against you. In a little more detailed stuff, that's week 4. We'll start talking about options and advanced trading. And then again, you have your bearish expanding triangle. Again, the only time that I play the bearish extending triangle is if I see it going up and it touches this resistance point right here and rejects. Then I'll jump into a play on that. But I really don't play this one much. When it comes to the bearish side of a stock, same thing. I like my double tops. I like my head and shoulders and triple tops. And I love my wedge breakouts. So number 1, number 2, then these two are tied for 3. All right, so we talked about dojis. Dojis definitely tell the tale. And so, like I said, they can be found at the top of a trend or the bottom of a trend. So they most likely are going to be assigned a reversal. But
we have another question
okay,
here.
go ahead.
I was watching some conversation. Looks like one of the questions was kind of answered. What does reject mean?
Reject means that a stock is going. So right here is a perfect example of a rejection. Right here, see the stock going up, it's going up, it's going up. Then it hits a ceiling right here and gets rejected at this price and starts going down. And then here is going down, is going down, is going down, and it hits a bottom here and it gets rejected so it doesn't go down anymore and starts reversing to the upside. So that's what I mean by rejection. It's rejection at some key levels that's making it trade within a certain channel. And you want to look for those rejection points too. And we'll talk about that. I think I have it in the next couple of slides. All right, is that it on the questions?
Yes, sir.
Okay, cool. So like we talked about with the doji, this is tug of war. It represents a lot of indecision, but once a decision is made, price action follows, big price action follows. And all that means is that the price of a stock is giving you action, is going in some direction pretty strongly. So that's why we like dojis. So we look at it right here. Here's a doji here. Don't know what's going on. Don't know what's going on. We're trying to pull it back up. It didn't happen. Gives us a confirmation that it's going to be going the opposite direction. Then we have big price action, right? A huge drop occurs here. So that's what we mean by price action follows dojis. So there's a couple of type of dojis, right? Gravestone doji, which is like a gravestone. Stock's probably going to die once you see that. Here's an example of that right here. Gravestone doji, stock starts going down. You have just your regular doji, which is we don't know what's going on. That's that indecision doji. You have a dragonfly doji here, which is typically a more positive signal on a stock decision. And then you have your long leg doji, which again is just indecision. They're trying to pull very hard in both directions. Now this right here, once you see this and they're trying to pull very hard in either direction, this is really going to let you know that once it makes a decision, it's probably going to be some strong price action going on here. We talked about the hammers on the patterns. So there's a different type of hammers that we can look at too. These are, again, you look at these for potential reversals at the end of a trend, depending on what direction that is going, right? So you don't look at a hammer by itself. You want to look at confirmation candles, but you definitely want to keep an eye out for these things to start getting your mindset to say, okay, I see a hammer. I'm gonna give it a couple candles to see what direction or what trend that this stock is actually going to go in before I actually take a trade. So again, the original hammer here, you hitting down, the stock's going to go up, right? You have a downtrend, hammer falls, stock goes up. Inverted hammer, downtrend, hammer swings, causes the stock to go up. Now, these is we talked about the hanging man. Hanging man is a type of hammer. It's at the end of a uptrend in a stock or prices going up, hangs there for a while, bleeds out, then a stock starts to die off. Then you have your shooting stars, right? We know what shooting stars do. They don't go up, they actually shoot down. So those are the different type of hammers that are pretty important to look for too. So I'm trying to get you guys, I'm trying to give you guys those things that we use as traders that we do well with. To try to cut out the noise of other things that you may see out there in the market and just kind of get to the things that we know work very well. All right, so now that we see all that and we know how to identify those type of things, let's kind of talk about the chart reading. The first thing is somebody said, does the scalping follow the same thing? And definitely does, right? So when we talk about scalping, that's on the 1 to 3 minute, and the 1 minute is the fastest moving, super duper volatile, but you can get in and get out real quick. I mean, there's some charts that you can actually look at down to like the 10-second, 30-second. I've never done that. That's moving way too fast. I don't even want to do that. The 2 minute is good for seeing like some of the real-time price action for entry and exits. The 3 minute is also very good for scalping. It's not as fast as the 1 minute. So if I get into a trade on a 3 minute, I'll still drop back and forth between the 1 minute and the 3 minute to see how it's moving. The 5 minute is good if you want to get into a trade and you're not really looking to scalp. You may want to stay in it for an hour or two. You would look at the 5 minute. The 15 minute is great for any type of reversals that you may see, like the different hammers and the different doji types, the 3 white knights and the 3 black crows. You want to start looking at that, and then also looking for engulfing candles. Once you see those on a 15 minute, that's a good indication that a stock's going to reverse and go a different direction for a while. Now, 1 hour, once we start getting into these larger time frames, 1 hour or the 4 hour, these are good for seeing the bigger picture of the day. If a stock starts in a direction on the 1 hour, it's typically going to stay going that way for the next couple of hours. Or if you see it open in a certain direction on the 4 hour and give it 15 minutes, it's probably going to go in that direction for at least the first 4 hours of the day. So you're pretty safe if you make a decision going in a certain direction for a trade, for a day trade. Now, on the daily, this is for, holding for a day to a couple of days, even maybe a couple of weeks. If you start seeing patterns on the daily form and it's a strong pattern like a falling wedge breakout and you see it break out on the daily, you can jump into a call and let that ride for a couple of days and just milk it once you start seeing it on the daily time frame. And then our weekly is for individuals that want to do like week-long, month-long, or even leap options. That's when you want to start looking at the weekly and the monthly charts to start reading and making those decisions on the type of trade that you want to get into. All right. I'm gonna pause. How are we doing? I know this is a lot of information. I know it's a little deep. If I'm flying over your head, just pause and let me know that. How are we doing? If we're moving along well and we're good, let's get some yeses in chat. If we need to stop, let's get some no's in chat and get some questions answered.
There was a question in the chat.
Yeah, it says Mike. Oh, Mike's back.
Yeah, Mike's
Yeah,
in.
I'm back.
You
Oh,
good
cool.
though, man. You're doing a good job, man.
Yeah, no, go ahead, do your thing.
That helps, Mike. It says Mike is here. Mike, is there a method you could use to help with memorize? Oh, okay, I didn't even see that. Y'all can answer that in the chat. I'm sorry, gentlemen.
Okay, we good then? Perfect. All right, cool. So support and resistance. Somebody asked about, okay, what's a rejection? And so these are rejection levels of a stock. You have your support, which is that the stock's going to jump. It's like the safety net, right? A stock can drop, or you can fall off of a building, but that safety net is as low as you're going to go, and then you're going to bounce back up. That's the support for a stock. The resistance is the ceiling, right? As high as you can go, that's going to be your ceiling. Typically, a stock will hit that and come back down, right? That's how, when you see like down here, you see these different, where's my mouse at? You see the up and down, up and down, up and down. This is supply resistance, or this is considered a trading channel. And when I start my day, this is what I look for first, is what are the trading channels of this stock over the first 4 hours of the pre-market. How high has it gone? How low has it gone? And that's going to set my channel for me to start looking for any type of a breakout before I get into a play. And by breakout, I mean like right here, right? It got through this resistance here and it broke out. This would be when I start looking to get into this play, because now I have a new up leg and some new support and resistance. So I don't jump into plays without charting my support and resistance or my channels. And then outside of that, I wait for either a channel break or I wait for a trend to form. So this right here would have been an uptrend that formed. And so I would have drawn a line here and say, okay, I see this trend forming. I'm gonna see if this is going to continue, or would it break below? And it would have broke below my trend line. And so I would have jumped into a put play, or a belief that the stock's going to go down, or a bearish play because of that trend line being broke. So this is how I start my day, doing my support resistance and identifying trends. And we're going to talk about trends also. So questions. Support is the floor price has hit. So this is where you may want to start buying if you want to trade within the channel. I typically don't, unless it dropped from way up here and I see it bounce. I may get it down here. But me personally, I really like for a breakout. Sometimes I do trade within the channel, but I also like the breakout first. And then the resistance is just the ceiling, which is how high has the price hit, right? So that's when you want to start looking to sell. If you got in down here and the stock starts going up like this, you can see if it's going to break through here before you sell, or you can wait for it to touch and get out, or you can wait for it to touch and then give you a red candle or a bearish candle before you jump out. Typically, I wait for a reversal of a candle, and then I'll say, okay, first red, I'm out of there. I'm not even going to play games with it. I'm going to take my profit and go.
Say
How
that
early
right
do you
there
start?
one more time.
Sorry,
Toddy. I said, say that one more time. Mike, Chris. Exactly.
Yeah.
What you said.
Yeah, so if I'm in a play already, let's say I got into something like right here and I see it going up, going up, going up, and I see it hit this resistance line and it gives me a red candle, which typically is a reversal, or I see a doji or anything that's a reversal indicator, I usually just jump out and take my profit. I don't even play games with it.
Got it.
How early do you start looking at stocks, and what's the earliest you can put a play in?
Yeah, so you have pre-market, right? You can actually buy stocks in the pre-market, which is, I think that starts at like 4:30. And then with Robinhood, they have 24-hour trading, so you can trade all night if you wanted to. Now, the only thing about 24-hour trading in the stock market is that it's not going to be a lot of volume overnight, right? So that's the only thing that you may run into. But yeah, you can start trading as early as 4:30 in the morning. For me, I look at the 4:30 up until right before the market opens. So I look at from 4:30 until 8 a.m. And based on whatever the stock has done within that time frame is when I do my support and resistance. I put my trades into our group chat that we have on Discord. I put the trades in there that I'm looking at for the group at about 8 o'clock. 8:30, the market opens. We wait for a trend to happen or a breakout to happen, and then we start making plays for the day. But yeah, you can start as early as 4:30. I start looking at the market overnight to start seeing what futures are doing, and then get up in the morning around 6:15, start seeing what's going on. But I don't do my chart again until 8 o'clock or so. That's when I start doing my charts.
Thank you.
You're welcome. And then, though, at the end of the day, right before power hour, I'll start looking to see how things have moved around and how new trends have formed throughout the day to see if I'm going to either do a swing trade to hold over for the next day or two, or if I'm going to do a power hour play. So I also will do that throughout the day. All right, we talked about the relative strength index. I like this. This is a momentum indicator on how a stock's doing. Again, over 70, pretty hot. You may want to start looking to sell or get out of a position. That means the stock is over purchased. And then again, under 30, you want to look to buy. It means it's oversold, especially if it's a strong stock. Like if you catch a Google, a Microsoft, or any of those under 30, you better buy, right? Throw the checkbook at it and buy those stocks because they're going to bounce back. Yeah.
It's a quick question. Yeah, what over 70, what, and under 30, what? That was my question from last week too.
Okay. So it's just the range of stock strength, right? It goes from 0 to 100, but traditionally they stay within that 30 to 70. That means that a stock is performing how it should, is not really too out of whack. That's just kind of the safe zone. And outside of those safe zones are when you want to start paying attention to, if I'm in a stock, I'm gonna get out, or if I'm not in a stock, I want to start buying. So that's all it is. It's like a safe zone channel of a stock's momentum, right, and how it's moving.
Okay, great. Where would I see that at?
Yes.
Is that this little bar thing at the bottom where it says sell and buy? And
Exactly.
Okay.
So that's what that's showing you. And as you can see how it correlates, right? This is over 70, stock starts going down, right? This gets below 30, stock starts going up. Over 70, stock starts going down. So this just shows you how it actually correlates to real-time price action and movement. So if you decide to start trading, right, you can have this set up on TradingView, which is what I use for my charting, or you can go to stockcharts.com to see the RSI of a certain stock. Remember, this was in I think week 2 when we talked about when to buy and when to sell. This was one of the easiest things to really look at on when to buy and sell a stock.
Great, thank you.
Yeah. So if I was a new trader getting to the game, I just want to start buying stocks, I would go look at what are the holdings of the S&P 500, right? Like maybe the top 25, right? That may be a lot, maybe top 10 holdings. And I will see where they are on the RSI. And if I see any of them near or below 30, I'm going to go see what are those stocks, do a 5-year look back, go to Simply Wall Street and see how they're performing against their peers. How do they rank? And if all those things line up and they're below or right at 30, I'm buying shares in that stock. As a new investor, that would be the first thing that I would do. If they're a stock that you don't know about, right? If they're an Apple or Amazon or Microsoft, well, yeah, if you see any of those below 30, definitely get in. I think, was it November or so when Amazon and Google were at like $84, $85, their RSIs was 20, 25s. Like that should have been indication to anybody like we need to buy these shares now.
Okay, Chris, I got one more question.
You
So the key financial ratios, right? The price to earnings, you told us to make sure they're like 20 to 25% of the earnings.
No, not
What-
25 to 25%. It's like, yeah, 20 to 25. My bad. It is percent. But that just shows you like the price does the price match up with how much money they're earning, right? Or is it too overvalued, like out of whack? Some stocks are just overpriced and it doesn't make sense, right? Like I said, we talked about Rivian. When they came to the market, Their IPO was like $70 and it made no sense because they hadn't even made any revenue. So those are the type of things that you want to look at to see if they're out of whack.
Okay, thank you.
You're welcome. It's like, and I always bring it back to dating. It's like if you met a dude and he got a Hellcat, right? But he makes $12 an hour, you know something's just not right there. Same with the stock.
Oh, that was good. Thank you.
Moving averages. So moving averages, we talked about this also. They kind of assess a stock's trend by averaging the price over a fixed time period. Again, I use the simple moving average. Mike uses the exponential. Now the exponential to his credit, it does take more real time. It waits real time out more than the simple moving average. I just haven't switched over because when I started trading, I was using the simple. It's worked for me, and I'm the type of, if it's not broke, don't fix it, right? But I understand why people use the exponential. And the thing with the moving averages, especially like the 200 or the 50-day moving average, if a stock is trading above that moving average, the moving average typically serves as a support or a trend line, actually. And as long as the stock is hovering above that moving average based on the type of trade that you're in, you can stay in that trade until it kind of breaks below. And that's when you want to start looking at exiting out of a trade. So I do use my moving averages to give me an indication. Also, if I see a rocket, which is a stock that's kind of taken off and I missed it, if it's too far and it's too much of a gap between the stock and its moving average, I'm going to stay away from it and not trying to chase it, because typically it's going to come back down to that moving average. So I usually stay away from those if it's too much of a gap. So that's how moving averages are used, or you may hear it called the MA, but they're a real good indicator of how well a stock is actually doing. And you want to see moving averages trending up, right? As the days go by, you want to make sure that the stock is kind of going up. Sideways movement or downtrend movement are typically, things you want to stay away from unless it's just a pattern forming, like a falling wedge and it's a strong stock and it has volume and maybe it has earnings coming to where it's going to do well. You may want to get in a little early. And then trend lines. These are probably my favorite things to plot on a stock. And again, we're going to do some live examples here in a second, but trend lines is a saying with traders that the trend is your friend until the end, which means until it breaks. So as long as you're in a play and it's continually going up the trend, I think I showed you guys that when I was talking about PACW, as long as it stayed above my trend line, I was going to stay into that stock until it broke below my trend line. And that's when I determined to get out of it, or I see any type of reversals. But trend lines are super important, and they're just like what you mean. I mean, just like what they sound like. You see a stock going in a certain direction and you just find a line. If it's going up, you just put a line up under it. And as long as it's bouncing up on top of that line, you stay in a play, because even though it's bouncing up and down, it's actually stair-stepping up, right? And then if it's going down, same thing. Put it around along the top. And as long as it stays below that trend, you want to stay in your bearish position on a play. And then lastly on this is probably the ultimate cheat code. This is the Wise Wave in price action. And so the Wise Wave helps you not only to identify a trend, but it also gives you an indication of the trend strength because of the volume bar indicators. And it's easy to look at. Green bars just mean it's an uptrend. Red bars indicate a downtrend, so you can't get confused on that. But the trend strength is based on the increase in these volumes. So as long as this volume is continuing to increase, your trend is going to keep going up, and the strength of that trend is going to keep going in the direction of when you got in. Same with the inverse here, right? I know this may be like, oh, this is weird. It's going up, but the stock's still going down. As long as this is red and the bars are increasing, you want to stay into this play. And this is also a trend line here, right? This is a trend line going up under this stock here. And as long as it bounces above my trend line, I'm going to stay in it. Then once I add this Wise volume, I'm going to stay in it because the volume is going up, which means that my trend is strengthening. So those two things. And then the price action is just as long as the volume is going up and we're in a trend, is the price still going up too? And at any time that the price stops going up, that's going to be your first indicator to possibly get out, because if the trend line's going up, the volume's high, but the price is shrinking, those are mismatched. So it's time to make a decision to exit out of that play. All right, let's get into some live. So, all right. So first here, this is the 3-minute chart here of NVIDIA. And so what this shows here, this was my trend line on NVIDIA. Now, I wasn't in this one because this is towards the end of the day. So what I was looking for here for NVIDIA was, I was waiting to, after all this happened, right? And we'll talk about how we caught this one too on the upside, but I was waiting for the downside here on this trend. So as long as it stayed above this trend, I wasn't going to touch it, and I was going to wait for it to break and give me a strong indication that it was going to start going down before I get into a put play. So I'm going to keep this trend going out till tomorrow, right? And as long as NVIDIA stays above this trend, I'm not going to fool with it, because I'm waiting for it to drop, right? Just because it went on such a crazy tear, I'm waiting for it to turn around and give me some money on the downside. So I'm just going to wait until I see it break below this thing here. So this is how you would use a trend. Wouldn't even get into a play. Now I caught this late because I could have done this if I saw this earlier and said, okay, well, here's my trend. And as long as it stays above there, I'm in. But as soon as it breaks, I'm in a put. Now, if I would have caught it earlier, I would have did this and got into a put, because also, remember we talked about head and shoulders? Shoulder, head, shoulder, neckline, and it broke the neckline and kept falling. So if I would have saw this earlier, I would have waited for my head and shoulders to form, waited for my neckline to break, and then I would have taken this play down. So that's how you play trend lines. Now on the flip side of it, let's go to a larger time frame. Let's go to the 1 hour time frame. And so on the 1 hour time frame, I also had a different trend line. So this was yesterday when we were calling out plays in the group. Oops, hold on here. Let me move this down. So we're calling out plays in the group yesterday, and what I saw here, two things. Matter of fact, I'm gonna shut up. I'm gonna let somebody tell me what are the two things that you think I saw that made me say, this is a play that I want to drop in the group and tell the people in the group to get into a play on this through their earnings. Looking at this based on what we talked about today.
Head and shoulders.
So we're talking about getting into, we talked about the head and shoulders of when I thought I would have wanted to get into a put play, but I mean, so we caught this today. We caught this whole run up today. And so my question is, can you see what I would have saw to make me say this is something we want to look at as a play?
It had all them reds going down and then it turned.
It's the crows. You saw the 3 crows?
We had a bunch of dojis.
All right,
It's
two
such
good
a red
answers.
line.
Yeah, two. Okay.
Yeah,
Two good answers on that. Anybody else?
All right, so
All I hear is an echo.
He said RSI.
Ah, yeah. Who was that?
it's trail, man.
Oh, good gold star for you. All right, remember we
Well,
talked
Trail and
about
Regina, I'm sorry.
we talked about solid companies, right? And if I see a solid company with an RSI below 30, yes, I'm paying attention to that. This RSI here dropped below 30. It dropped down to 15 on the 1 hour chart yesterday, right? And so what that told me, first and foremost, is it's NVIDIA. It's a strong company. They're one of the leaders in gaming chips. They're one of the leaders in AI chips, right? They're signing partnerships left and right. So when I see a company like this with an RSI of 15, something's not right there, and I want in on that. The other thing is my downtrend here. Remember I talked about like that falling wedge is one of my favorites. This is actually a falling wedge. Let me do the other side of the wedge. So Oh, we're gonna trend line. Hold on one second.
Looking at this, where would I have seen the RSI?
All right, good question. All right, so here's my other piece of my wedge. So this is actually a falling wedge here. So this right here is my RSI. This is one of my indicators on TradingView. So I put in my RSI indicator and I always keep it at the bottom here so I can see what's going on, right? This right here is that 70 top piece that we talked about, which is the high point. This down here is the 30, which is that low point here. And stocks usually trade within this safe zone. But I saw NVIDIA right before their earnings drop down to 15, right? So in the play yesterday at 8 a.m., I said, hey, NVIDIA for a lotto, we're going to play the lottery on NVIDIA. Most likely it's going to go up. We knew that, but it went crazy. We didn't expect it to go as crazy as it did, but we knew something was going to happen. The other thing of it too is that, like I said, it was in my falling wedge here going down, and I know what happens with these falling wedges. Eventually is going to break out of this thing. And so what happened was we woke up to NVIDIA, ran from $300, ran all the way right at about $400. So when it came to a stock play, if you owned shares of NVIDIA, right, you were up like 30% just overnight. Options plays, almost every option went up about 5,000% overnight because of how crazy NVIDIA went. Now, the other indication, once you see something like this, is in the pre-market, we were like, well, we're going to expect a pullback in NVIDIA. And the reason why we expected a pullback, first and foremost, because it went parabolic to the upside, but also we already had this resistance level here pointed from history, right? And then that's the number two thing. Remember, we want to wait to see this resistance, if it's going to break through or reject. So we were already waiting to say this is probably going to reject because it went so crazy. And then the third piece of this is the RSI was way above 70. We're at 86. So it was running super hot. Actually, it got up to 90. So it was running super hot. So all eyes were on, this is most likely going to come back down. Now, it hasn't come.
Chris.
Yeah.
Well, Kendra wants to know, where's the RSI on here?
The RSI is down here.
That's
right?
what I was thinking. Okay.
Yeah, this is here in the purple. This is my RSI right here. And so again, these are just indicators. And you're right. And if you decide to start trading and doing stuff like that as part of the group, we'll walk you through this. We'll show you how to set up your trading view and what indicators and things to put in here. Another thing on this too is like the volume was crazy, right? The volume started shooting up, going kind of nuts also. But again, these are the three things or whatever that we saw.
Hold on, one more thing. Regina asked, can you make the candlesticks bigger so that we can see better?
My bad. There we go. All right. So downtrend breakout. Now, here's another thing too. So now here, got another trend forming here in the last couple of hours. And this is called a descending triangle. So this is another trend that we would be looking for, and with our weight on here, so it's similar to like a falling wedge. If it breaks above here again, I'm going to probably jump into a play because I know that the resistance is at about 400. So I could jump into this play and possibly ride this back up to this 397, 398, almost 400 before it rejects. Or again, we saw the head and shoulders right here that it formed out. So if it breaks below here, I got a lot of falling room for it to come down and make money on a put play this way too. So I never guesstimate. I never try to act like I know what the market's going to do. I only look at patterns and I'm patient to make a decision based on what the pattern tells me. So with this, I would wait for one of these breakouts to happen before I jump into a play. This one here, we got into this one overnight right before it breaking out because we saw these things forming here. We knew the history of NVIDIA. We know how crazy AI has been going. We know that NVIDIA has been all the rave in the news around AI. Before I dropped the play in the chat, I looked up and said, what are analysts' expectations of NVIDIA's earnings? All the analysts said they expect NVIDIA to have record earnings and break records and go crazy. So those things, again, the fundamental pieces, right? The market sentiment, as well as the charts, I'm putting it all together for me to make a decision on calling this play out and jumping into this thing overnight.
Okay, Chris, I got a question. When you just did that downward triangle at the red candle right there,
Uh-huh.
hey, how did you know to start your forming of the triangle at the top of that red wick instead? Like, I don't understand. Yeah, what
Great question. No, that's a great question.
Because I don't even know if I can get it out all the way, but I just like, why didn't you start doing any type of lines with the green candlesticks versus the red one?
All right, so two things. So see this here, this green here, I have a trend line there, right?
Right.
So I was waiting for this to break, so this would have been a put. Now this, right, the reason I started here was because this was my resistance point. So this was the start of the downtrend of this, right? Because it came up here and resisted, and then the price started going down. Then this is where I get my two touches to form. Now this here is staying horizontal, so this gives me my base of the triangle. But yeah, the only reason I did it that way is because of my resistance point here in the start of my downtrend.
Oh, okay. Thank you.
Because I could have easily done this too. I could have easily said, well, I'm gonna stay in it here. As long as it stays here, I'm gonna stay in this play, right? Same thing. And then once it broke down, this is my indication to get into a reversal play. And because of this doji here, and because of my resistance. So we take all these things into consideration when we're making a decision on this. So these things are all called like areas of confluence. This is an area where all these different data points come into the same place and a decision has to be made. And once the market makes a decision, that's when you run with the market.
Hey, Chris.
Yeah.
What does that tell you when the RSI drops below that 30 point level? Like, what's the market doing? Like, what's that tell you?
So remember, we talked about, I think it was week 1, we talked about fear and greed index, I believe.
Yeah.
So what that tells me is the market is extremely fearful and people are selling like crazy. People are selling. A lot of times people don't know why they're selling. They just see somebody selling and they see a stock going down, they panic and start selling also, right? So when it's below 30, that means it's oversold. People have sold way too much. And this is when extreme fear hits. And that's when you want to start being greedy, like Warren Buffett said, right? When people are fearful, be greedy. When people are greedy, get fearful. So once it goes above 70 and it's super hot, that's telling me that this is when everybody and their mama knows about it. And we know when so that happens, things starts to fizzle out. So I'm going to let y'all run with that from 70 up to 93, but I'm getting out at 93.
Okay.
Right. So those what those two things tell me.
Thanks.
Good question.
So, Chris, do we have to have like 100 shares in here before we could do them?
Nope, not at all. So two different ways to do options. You have your covered calls, and then you have what's called, covered options, and then you have what's called naked options. So covered options are if you have 100 shares, yes, you could do it that way. Naked is that I don't have 100 shares, so we're not worried about that. All we do when we trade options is we're trading premium for premium, which means I'm paying a certain amount of dollars to have the right to buy 100 shares if I wanted to exercise it, but I'm not doing that. I'm paying, let's say I pay $1,000 to get into a play and it goes in my direction, and now that play is worth $3,000. I'm just going to now sell that right to someone else for $3,000 and profit my $2,000. So when you trade options, if you're not doing it or selling options, you're actually just trading the rights for someone else. It's like if you're in real estate, it's like somebody who says, let me wholesale this house for you, right? Let me get you under contract, give me 90 days to sell it. I don't own the house. I just own the rights to the house to actually sell it. And that's all we're doing when it comes to stock options. Right, we're like middleman, like, okay, I know somebody who has, I know the plug, so I'm gonna get it for this price, but I'm gonna come to you and sell it to you for this price, and I'm gonna take what I got in the middle. That's all we do.
Okay, thank you.
Good question. Same with shares, right? You don't have to own a lot of shares. You can buy a share at a time. And like I said here, NVIDIA at the lowest point of yesterday was at $293, went up to $396. That was still $100, right? Just from a $300 share. So you don't have to have 100 shares or even put up a ton of money. Even when we think about, I don't know if Tamara is on here, right? She was in the group and she said, man, I accidentally bought PACW because I thought that's what you was telling us. I'm like, no, that's not what I was saying. I was using an example. She hit me on the side and was like, so what should I do? Should I sell this? looked at the chart for, said, nope, it's on our trend line. We're going to hold on to this thing. You bought it on accident, but then ended up selling it at a profit, right? And we're talking about a $6 stock that went up to $8. So you're talking about what, 30, 40% on your money. So I don't know what she bought, but let's say she bought, $60 worth. She made $25 overnight for really not doing anything. Some people, that may seem like that's not a lot, but imagine if you can multiply that $25 every day of the week, right? So now you're at $125 a week, or $500-600 per month. So those things add up. We don't need home runs. We just need compounding wins, whatever that looks like. Again, when I first started, I was like, I just want to make $50 a day, because at $50 a day, that's going to give me $1,000 a month, which is, I can go get dang near any type of car for $1,000 a month. I mean, that wasn't my mindset, but still, for anybody, that's what you could do. Or, a 1-bedroom apartment, or just stress relief, right? $1,000 a month help you pay down any type of debt. And then you go from the 50 to say, now I want to do $100 a day. Then I want to do $200 a day. And then once you get into that rhythm and you start building up that account, you'll have the money to really play, right? To where you can do the 1,000, 3,000 shares, and all you need is for a stock to go up 30 cents, and that 3,000 still going to get you, that 30 cents want to get you a few $1,000s in a day on a trade. So, that's the thing. We want to start small and just start building our way up. And there's just so many different ways to do it. Shares or options. Questions before we close out? I know this one was a little longer because technical analysis is a little deeper of a dive. Also want to get some live examples in here and kind of show you what it looks like in real time. But yeah, let's see if there's any final questions. And if not, we'll call it a night. Week 4, we're going to get into options and really talking about what that means. I know I touched on it a little bit today, but we're going to get into options next week, and that's going to be the final week. After that, I'll get everything packaged up, branded up, and edited, so you guys will have access to that. And we'll talk about what that looks like for those. Remember, I think when I put the thing out, I said the first 5, there were a list of things that I was going to do for you guys. That still remains true. We did open up the floodgate, so won't be able to do the same thing for everyone, but I'm definitely going to make it fair for everyone who wants to continue the journey with us. But with that, we'll call it a night if there's no more questions, and I look forward to seeing you guys in week 4.
I have a question real quick, please.
Okay.
I need a little hooked on phonics. I just told Mike that, but because I'm more of a hands-on person, so this is a lot for me, but that's okay. What is there any type of literature or like books that you read up on or anything to kind of help me to be able to grasp everything?
Yeah, when it comes to technical analysis, the first book that I purchased was, and we have all this information in our book, but the first book that I purchased was actually Technical Analysis for Dummies. Those for dummy books. That was the first book that I purchased, was Technical Analysis for Dummies. But again, we also have more breakdown within our book, right, with the definitions and what these things mean if you want to purchase it that way through inwallstreet.com.
Okay, so I can just go to your website and get it. Okay.
Yeah, and with that also gives you, again, that gives you the access to the recorded information, that gives you access to the Discord group, and with the Discord group you have dang near all day access to me, Mike, Pat, Chantrell, the others that are in the group doing well also, to ask questions. We call out plays every morning. We do chart sessions. Sometimes we call out and trade live. So there's a lot that comes with it.
Okay, Chris, I got one last question.
Okay.
Back in week 2, when we was talking about reading the stock table, one of the things was the day's range or whatever.
Yeah.
The example we used was SPY, right?
Yeah.
And you said that they had opened at $4.15?
No, that was $415 for SPY.
$415.
Yeah.
Okay. And then you said it closed at $4.21, and that was about a $6 difference. That's confusing to me.
So open at $4.15, closed at $4.21. So yes, $6 change of $6 in the opening and close price. So that's all that means. So if we look at, this right here on NVIDIA, right? This was the open 379, right? Remember we talked about the bottom of the full candle is
Right.
the open and the top is the close. So
Right.
it opened at like 379.49, and over here to the right is what gives me my price here. So if we do this line here, 379.77-ish is when it opened. And then I'm sorry, I'll take that back. 384.86 is where it opened. Sorry, is where it opened, and then 379-ish is where it closed. So again, that would be a difference of about $5. So it opened up, but the stock lost $5 in value by the end of the day. That's what that means.
Okay, okay, thank you.
And when it's red, that means that it opened higher than it closed, right? If it was green, let's see what the SPY did today. They ended up red too. Anyway, let's do it on, let's go back to Thursday the 18th. So what this would mean is that it opened up at 414 and it closed at, yeah, like 419-ish. So a difference of $5. So this stock went up in price $5. So if you had a share of this, you purchased it at 414, you could have sold it at 419 and made $5 is what it means.
Very good, thank you.
That clear that up? Okay, cool. Any other questions before we call it a night? All right. Again, appreciate you guys being on. Hope this was helpful. I know it was a lot, but again, we're going to get the recordings taken care of for you. But I do know this was a lot of information. Hopefully I made it clear, made it plain. If you have questions, we have the Facebook chat open. It's always open. Ask your questions in there. Either myself or Micah jump in there and get the questions answered, but that's what we're here for. I want to thank you again for joining us on week 3. We will see you next week. Same place, same time. We're going to get into trading options and what that actually means, and then we'll close out the series.
Oh, we also want a recommendation as well. Me and Regina Moss, we're at Panera Bread right now, and this is our first week together studying charting. So that's a recommendation, man. Let's do it every week, you know.
For sure. Absolutely, that's a good recommendation. Yeah, find you a accountability buddy within the group chat.
They need some homework, Chris. Joy wants some homework.
All right, let's get it. All right, homework. I want you all to go look at your, your 2 or 3 stocks that you're interested in. Go to the weekly time frame, the daily, and the 15, and see if you can identify a trend and highlight the trend. And next week, I'm gonna have you, drop a screenshot of it in the chat, and I'm gonna pull it up, and we're gonna see if you got the trend right and what it means. See, so people start dropping off when we said homework, but it's okay. I'll still call you out. All right.
I got one too, Chris. I will say
the homework again.
Yeah, for next week, go through the weekly, the daily, and the 15-minute chart and see if any of those give you any type of trend that you can be looking at. Identify the trend, try to draw it out, even if with a pen or a marker or whatever, and then drop a picture in the group chat. I'll pull a couple of them up and we'll talk through what you looked at, what you saw, why you thought it was a trend, and what you think it's telling you, and we'll start honing that.
Thank you.
What was yours, Mike?
I was going to say, find a pattern, some of the patterns that we went through today in the class. And I say, memorize one pattern by next week. Just one. I know we didn't, I'll screenshot it to the chat, just a screen of the patterns.
Yeah.
Pick one and just memorize just that one. And we'll try to at least show you a live example of that pattern, but just start getting that muscle memory down, because without the patterns, that's the biggest integral part to trading is recognize patterns.
Good stuff. Good stuff. All right. Have a good night. Peace.
Peace.
Thank you.
You guys are welcome.